I think we're recording
Okay.
now.
I took it off. It's paused.
Okay. Well, hi everyone. Thanks again for joining us. This is a webinar called Increase Profitability and Free Up Billable Time by Optimizing Your Cash Cycle. My name is Carlos Gomez. I am the Chief Revenue Officer for Frontline Managed Services. And for some of you who do not know Frontline Managed Services is the company that resulted from the joint venture of HealthTop Consultants and IntelliTeach. We serve more than 400 firms. We're the leading firm helping our clients with outsourcing solutions on legal and accounting markets, or with anything back office. In particular, we help firms enhance their profitability in cybersecurity and by providing IT managed services, IT service desk billing, e-billing, and AR management services. Today, we will be speaking specifically about optimizing the intake to cash process and doing a deep dive on best practices for e-billing. Suzanne Zimmerman, our presenter, joined Frontline Managed Services in 2002. She's been doing legal accounting for the last 25 years. She's one of the leading experts on e-billing and leads our e-billing and billing division. She's been helping over 40 firms since joining Frontline back in 2012, and has been working with a wide variety of clients from small law firms to some of about 40 AmLaw 200 firms. So with that, Suzanne, please go ahead and kick us off.
Thank you, Carlos. Good morning, and thank you for joining this presentation. Every step of the intake to cash process offers opportunities to improve and accelerate the cash cycle. Acceleration not only shortens the cash cycle, but also improves the collections realization of the ultimate payment. This slide includes an illustration of each of the important steps between intake and cash. Starting with intake, then you have onboarding and maintenance, pre-bill edits, submissions, rejections, appeals, AR collections, and then cash. In this presentation, we will mainly focus on three areas: billing, e-billing, and AR and collections. Billing. The key performance indicators that we will address here are how much time passes between when the work is produced and the invoice is submitted to the client, and how much of the invoice submitted are accepted, rejected, and or reduced. The challenges in this area include intake. Valuable time is lost due to a lack of information collection and sharing at the time of engagement or intake. Timekeeper education. Time entries should be written to inform the client that the task was necessary, that the work performed benefits the client, and that the time spent was efficient. Timeliness of pre-bill pro forma return. Edits are often not returned to the billing department in a timely manner. Time versus billing. Even when the time is entered correctly, there is an important role to be played by the billing department. Invoices still must be converted to a final bill format and sent or e-billed to the client. The best practice solutions in this area include requiring and distributing client billing guidelines at intake. This significantly improves both the timeliness and the quality of billing. Translating the key points from the billing guidelines into easily accessible and digestible bullet points can save time for everyone involved, as well as improve collection realization. Educate timekeepers. Good timekeeping practices are essential for the profitability of the firm. An invoice is more than the method of obtaining payment. It is a presentation of the work done on behalf of the client. For this reason, care should be exercised to write defensively, and the value to the client should always be distinctly conveyed. This timekeeper education should start at orientation, and the firm should distribute and maintain a timekeeping style manual for consistency. The largest bills are produced by the busiest partners. Consider breaking up their pre-bill pro forma stack into multiple deadlines. For example, the top 10 clients for a 1-week turnaround, the next 10 for a 2-week deadline, etc. Another benefit from this method is that the billing department isn't overwhelmed with all returns during 1 week of the month. The key takeaway for this area is timekeepers who understand and follow client requirements can shorten the cash cycle by up to 30 days by reducing rejections and reductions. eBilling. The key performance indicators that we will address here are how much time passes between when the invoice is ready to submit and when it is successfully received in the vendor site. What % of the e-bills are accepted on the first submission, and the volume of bills that can be processed by one person. The challenges in this area include billers have a lot of duties, many that require detailed and focused work. When billers also e-bill, this causes competing priorities that prevents them from the monitoring and tracking that is critical to making e-billing successful. Often the billing department is unaware of new timekeepers until the point of billing. Then they have to stop the billing process until those timekeepers are entered and approved on the vendor site, usually 2+ weeks. Without the ability to track and monitor invoices after the point of submission, rejections are often found 60 days later when the collections department gets involved. When the billing department is too busy to appeal short payments, this can result in losses of 10+% in collection realization. The best practice solutions for this area include separation of the billing and e-billing functions, which allows the biller to provide the service level that many partners require, while allowing the e-billing team time to monitor, track, and follow up with timekeepers to meet rejection and appeal deadlines. Either through technology or manual review, checking the leads files prior to submission can save time and effort, both with rejections and reductions, resulting in faster payment and higher realization. Technology can be used for alerts when new timekeepers enter time, when new matters are opened, and when rate changes occur, so the e-billing department does the required maintenance on the vendor site prior to the billing cycle. The key takeaway: following e-billing best practices can result in up to 30% more acceptance on the first submission. Why is e-billing important? The continuous client changeover from traditional to e-billing and changing e-billing vendors is causing a strain on firm resources. The percentage of a firm's revenue from e-bill clients is continually increasing, and of a firm's e-bills, up to 30% could be rejected upon first submission. The average days to bill is 40 days. In contrast, the traditional bills average is 35 days. Average days to pay is 50 days. For traditional bills, the average is 45. E-billing is adding 10 days on average to your cash cycle. Frontline's best practices can improve the cash cycle and payment realization. Here are our results. 96% of our e-bills are accepted on first submission. 98% is the payment realization that we are seeing on our bills. Invoices are submitted within 24 hours of assignment. Rejections are addressed and cleared within 48 hours. Our billing cycle is 15 days faster than the typical law firm. We start with an assessment of your intake to cash process that includes volume analysis and technical evaluation. Our services include traditional billing, pre-bill edits. For eBilling, we offer submissions, including prescribing the invoices, rejection resolution, appeals, and onboarding and maintenance of the vendor sites. We also offer a feedback loop to timekeepers to educate them on their errors and how to prevent reoccurrence. AR management. Excuse me. The key performance indicators in this area are how much of the portfolio is aged less than 60 days, how much of the bill amount is ultimately paid, and minimizing the value of write-downs and write-offs, including gone but not forgotten or interim write-offs. The challenges in this area include partners often do their own collections, resulting in a loss of billable time. The contact person is often not the accounts payable department. AP contacts can be critical to timely payments. Collection strategies can be inconsistent, often driven by financial or partner distribution periods. The best practice solutions for this area include making it mandatory that the AR team begin follow-up for payment at 45 days. Establish a management escalation point of contact for non-responsive attorneys and critical issues. Segment AR by aging groups. For example, clients with balances over 180 days may be escalated to an AR member who specializes in skip tracing, negotiations, and payment settlements. There should be regular touch points between partners and the AR team to discuss accounts and formulate strategies on problematic balances. The key takeaway here is that payment realization improvement equals firm profit. This is our proven strategy and service delivery model. To recap, organize the billing and collections department by function: billers, e-billers, and AR specialists. Create operational work plans. Set targets and benchmark by personal portfolios. Specialized training and skill sets by team. And leveraged outsourced models are proven to supplement and scale at sustainable quality levels. Keys to our success. Our hiring profile and training program. All employees have a 4-year degree and undergo 2 months of intense training specializing in law firm accounting operations. Our team members are rewarded for meeting service level agreements and quality expectations. We have proven quality control policies and procedures to ensure compliance to client guidelines, preventing rejections and reductions. Invoices are audited prior to submission to identify errors and ensure compliance. We use technology for alerts and notifications to get ahead of the billing cycle by maintaining vendor sites prior to that stage. We identify and inform timekeepers of recurring issues related to their entries. With our 100+ years of combined management experience in legal billing and collections, we are able to identify firm-specific challenges and advise on best practices. Our IRIS business intelligence software enables us to use technology and reporting to improve intake to cash cycles and significantly improve payment realization.
Thank you, Suzanne, for the overview of how we look at the intake to cash cycle. I know we went through some of the materials relatively quickly, but we really wanted to make this a conversation between the audience and multiple members of the Frontline Managed Services team who are on the call, and we are able to answer your questions. I guess to get us started, Suzanne, and by the way, I believe there's a question function on available to everyone. Please feel free to submit your questions there. But we want to have a conversation around and get a deeper dive on what we just covered, Suzanne just covered today. And Suzanne, you went through at the very end. You mentioned that one of the best practices that you've seen with some of our firms, and one of the things that we do at Frontline is setting targets by personal portfolio, and also creating operational work plans. Can you go a little bit more into a little bit more detail about how you would advise clients to set targets and develop operational work plans?
Sure. So I'll take it into the collections area mostly, and that is that you tend to look at your targets at a firm-wide level, and breaking that down into individual contributors' targets can be an easier way to manage that and to track and make sure that you meet those those targets. So the operational work plans can be centered around particular practice groups, particular clients, particular attorneys, with, again, a set target per individual. On eBilling, that's we are also able to track, the level of productivity as well as the successful results at the individual level.
And when you look at the operational work plans, how would you structure those? What are the key components to that? What advice would you give people on the call as they're developing their own?
It's really, I don't know. I mean, I think that you have to really look at, what team members you have, what the portfolio looks like. But in general, we try to make sure that, that we have resources that are focused and targeted in particular areas. For example, as we talked about during the presentation, having the billers basically being the face of the communications with the billing partners takes the pressure off of the eBilling team to focus on, monitoring the bills once they've been submitted, making sure that any rejections are cleared immediately, as well as, if there are reductions to invoices that, we are researching those and making sure if there's any possibility to recover those amounts, that we do appeals. So I hope that helps.
Yeah, absolutely. Thanks, Suzanne. And there's a question that came in asking, what security issues do you have in place regarding accessing firm accounting records? I guess this is the recurring questions that we get all the time. What would we normally respond to clients that ask this?
Yeah, so we remote into the firm's network. We don't take anything off, offshore, off of the computers, and we work directly on the computers and save any documents to a firm drive. Beyond that, we follow all the same, security protocols that are used throughout our company, which are ISO certified. And, this is always, a concern as we talk to clients, but we've been able to allay any fears or any concerns that have been raised to us on this. So I think it has to be kind of taken at an individual level beyond that, but I can assure you that this is not the concern that most firms think it will be.
Thanks. Thank you so much, Suzanne. Another question that came in, they're asking, On eBilling rejections, are the frontline staff equipped to handle directly with the client, or do we act as intermediaries between the client and the lawyer?
Yes, well, we have firms that have us do both. We prefer to handle it directly so that we are, making it the most efficient possible. But we do have firms that want us to at least start off with working through the billing specialist, which we do. But we have also team members who work directly with the billing partners, directly with the clients, and directly with the vendor sites. We customize our approach to your culture and your comfort level.
Thanks, Suzanne. And here's a bit of a more technical question or best practice question. A caller is asking if, in your experience, should pre-bill reviews eliminate the necessity for a deeper biller review, or should they be in conjunction to reduce the potential rejections from e-billing sites?
So if I'm understanding the question, are you asking if the partners review? So I think that there's a component of things that can be found by the billing department, but there's always going to be things that the billing partner needs to advise. But we keep good notes on our part to make sure that if there's, a specific thing that happens with a client or a vendor site or a matter, that we always look there first. So we minimize the amount of interaction we need to, the interruption to a billing partner's time. But ultimately, the pre-bill process should, take care of the majority of it. But the other thing to know about e-billing is that the vendor site rules and client rules change. So sometimes when you think you know exactly what they're looking for, there are new things that pop up. So there's always going to be some need for an e-biller to do a rejection review and update our processes accordingly.
Thanks, Suzanne. And you went through a high level overview of the intake to cash cycle, basically mapping out a workflow, right? What this looks like a workflow where a new matter is onboarded and all the way through to the cash and AR. In your experience, where do you see the quickest gains, or what are the things that clients could do? I mean, you covered a lot of the KPIs, but where do you see the biggest impact based on adjustments that could be made throughout the process of the cash cycle?
Sure, and I think it all starts at the beginning. That onboarding, the intake is so important to make sure that the right information is gathered and distributed to the right people. And that to me is the key. They're all building blocks. Each of these steps that are done well will minimize the need of the next step to be time consuming. Again, it doesn't eliminate in every case, but if you find out at intake what the billing rates are, what system they want to use, how they want to receive their bill, what things they pay or don't pay for, and that information is then, distributed at that point, then the billing department can update whether it's e-billing, the vendor site, or their time and billing system to make sure that things are, in compliance as much as possible before it even gets to the pre-bill edit stage. And then the pre-bill edit stage, if there are bullet pointed instructions to the billing partner on the front page of the pre-bill, then that makes it easier for that partner to make sure that he knows what the client's looking for. And then the submission process, taking a little bit of time to, just look for things like block billing, or if they don't pay for photocopies, making sure those aren't on the bill, things like that before you hit submit can save a lot of time. And then once it's submitted, we monitor for 48 hours to make sure that there are no rejections. And after that point, we monitor, at least once a week, and we go directly to the vendor sites. We do not rely on Bill Blast or the hub because the writing back of those statuses are not always correct. So we go directly to the vendor sites to look to see if there are rejections. And then, like I said, for 48 hours, then we check those vendor sites at least weekly for anything that may have changed, including looking to see when things are approved, if there are reductions. Then for reductions, we do our own analysis. If there are things that we know how to appeal, we will do that directly, but if not, we'll go to the billing partner or directly to the timekeeper, depending on the firm's preference, to get feedback and submit those appeals. As I said, I'm sorry. Yeah.
Oh, yeah.
And then, as I said in the the presentation, that monitoring, being on top of it is a time-consuming process and often gets missed because of a busy billing department. So, but those are key to a successful e-billing process. And then the AR and collections, is some clients just won't pay until someone reminds them. But it also identifying issues early in the collection cycle is also important. And yeah, so that all will result in more cash.
Yeah, no, this makes a lot of sense, and I think I want to just tie it to the first point that you made, that a lot of the success relies on accelerating the cash cycle. That is really the end goal here, to get to approvals early, make sure that there's a methodical, cyclical operating plan to ensure things are moving rapidly through the cycle is really going to be the key for improving payment realization, because at the end of the day, there's always an increased risk as time passes, especially after the first 120 days, when a collection is not made, where that would fall into a write-off or a write-down or GNBF bucket. So this makes a lot of sense, Suzanne. And there's a question, actually you started talking about software, and there's a question that came in about how we at Frontline use software. It says, if a firm has software, i.e. Bill Blast, to monitor e-bills, would Frontline use the software as well?
Yes, we would. We don't rely on it, but we use it. So especially for submissions, the pre-screening of the validation process, and when we go to the vendor sites directly, we will update the Bill Blast or your hub to make sure that that the statuses and information there is reliable, and that you can still do your reporting from there.
Mm-hmm. Another person is asking if we can explain how we interact with from compliance groups in relation to client guidelines.
I'm sorry, could you repeat the question?
Yes, it's can you explain how you interact with firm compliance groups in relation to client guidelines?
So I'm not sure what firm compliance groups are, but what we would do is we would have our notes, basically our bullet pointed, from the billing guidelines to compare to the leads file, and we would make sure it's in compliance. Then from the point of a rejection, we would always refer to that first, and then and same for the reductions. So, and then we maintain our own records on what occurs for each client, so that the next time that we are doing a submission for that same client, we check to make sure that our history is taken into consideration, as well as the billing guidelines. If that didn't answer the question, please let me know.
Yeah, please. Yeah, if as we're going through some of the questions here, if you feel that there's a follow-up, please feel free to ask another question or comment, and we'll happily address them. So Suzanne, another thing that we would want to know is you touched on when you're talking about the service delivery model and how how we've learned that by aligning and creating an organization by functional expertise, that there are different skills that make the different teams better, right? So how, I don't know if you can talk a little bit about, and I guess it would be of interest to the folks on the call as they're looking into hiring personnel or right skilling personnel. How, what are the skills that make, for example, an e-biller a good e-biller versus a good AR specialist?
Sure. So, so to me, a good biller needs to be able to be conversant with the billing process to the extent that they can interact with billing partners. So that, that relationship building, that ability to, speak intelligently about what they're doing is very important, as well as the ability to focus and do detailed work. So I put those, as the top skills for a biller. For an e-biller, it's about, problem solving and organizing, and really just monitoring a lot of times to make sure that you're right on top of things. And there's a lot of follow-up skills that are also important. If we have an appeal and the deadline is in a week, we need to make sure that that the partner has multiple opportunities to respond so that we don't miss that deadline. So that takes not only the organizational skills to to recognize that you have the deadline and that you need to set reminders, but also to make sure that your follow-ups every 2 days or every 3 days are scheduled to make sure that you are on top of those. And then for collections, to me, collections is all about relationship building, and we call it collections, but I feel like that's a misnomer, because I feel like what we do in the collections department is we build relationships with the billing partners, with the clients, and so to me, that's the main the main personality difference between kind of the billers, which is more detailed work, and the collector, which is more social, I guess, in the way that relationship building is important.
Absolutely, Suzanne. And the reality also is that when when clients think about us or their AR departments touching base with their clients, the general counsels or the corporations in particular, it really is, the touch points are really with the accounts payables departments, right? It's not that they're calling the general counsel, or so they're fairly used to the type of interactions and the type of touch points and contacts and relationships that AR, like professional AR departments, would be accustomed to. So that is it has been a concern that has been expressed, and I think it's also to your point on relationships, having relationships with the right people at account payable departments and with the procurement teams is actually a benefit. Another question that we got here is just, I think, which I think makes sense also for us to touch on this, because a lot of what we're discussing here is just based on the volume of interactions and analysis that we've done over the years. The question is how many e-billing analysis have we done, and how many invoices are we processing each month?
Right. So this is increasing at such an incredible level on a weekly basis. Last I knew, we are processing about 70,000 e-bills a month. And as far as the number of firms that we have, we're servicing now, we're by the end of next week, it's going to be about 50. And then the number of firms that we've done the assessment, and that I would add maybe another 20. So our results, and that's not to mention from the collections side, which of course, when you're in the collections department, what you see is everything that was not done correctly in the intake to cash cycle before you get involved. So we've got 30 years of learning from that experience with hundreds of clients. Does that help?
Absolutely, Suzanne. Thanks a lot. And could you go a little bit more detail about what when you're doing the analysis? And by the way, for everyone on the call, I mean Suzanne and her team are actively running the analysis with help. In our case, at Frontline with the help of our analytics team. But when you're performing the analysis, what are the things that you're looking for, or can you just walk us through kind of a typical analysis and what a client or a prospect would normally see when we're looking at their e-bills in order to make recommendations?
Sure. So the first thing we look at is the actual volume. How many e-bills or bills are you processing a month? What are your rejection levels? What are your reduction levels? How many new matters are you opening a month? So that's all kind of for scope as far as staffing. Then we look at each of the steps of the e-billing process, who is processing them, and and how well that's being done. So how is the intake happening, and how is that information being shared with the billing team? At what point is the onboarding and maintenance happening? Is that something that you have the technical alerts and things to identify them before the point of billing? We find that many firms are not finding out about a new matter, e-bill matter being set up, or new timekeepers, rate changes, things like that, until the point of billing, instead of getting ahead of that billing cycle so that when it's time to bill, that it's all ready to go. We also look at who's doing the submissions. Is the traditional biller also doing the submissions, or are they handing it over to a separate team to do? And then who's monitoring them once those bills are submitted? And who's watching the bills to see when they're approved? And is there someone watching to make sure that they get approved? Often the slowdown is once the bill is successfully submitted, but it takes months to get it approved. We can help with that. We can contact the approver and make sure there's not something that we can do to help them accelerate that process. And then just understanding who's doing what, and where we see gaps in that process. Additionally, we look at the technical the parts of it. What software are you using? How well are you using it? And is it something that can be supplemented by our internal systems and reporting?
Mm-hmm. Thanks, Suzanne. And actually, this last point on internal systems is important to the next question. So I'm hearing my firm's struggling to manage our client budgets. Does your software monitor and provide automatic alerts to the billing department?
Yes, I think you're talking about when the spend gets to a certain level according to the budget. So yes, we are able to schedule alerts that will, let's say you want to say 75%. When spend, that means WIP and AR, WIP and billings equal 75% of the budget, we can have an alert go to the billing partner, to the billing department, or anyone that you would request to say, is it time to do a revised budget?
Mm-hmm. And a question about kind of just our clients and our client base is, what is the size of the average firm you work with, and what is the hands-on involvement like with other firms?
So we currently have firms as small as, I want to say, 50 attorneys, and we have firms that have thousands of attorneys. You know, we are currently in the process of, you know, starting more of a leveraged model instead of a signed model, so that we can service even smaller firms that can't afford a full-time or even a part-time employee. So, you know, we are definitely expanding into the, you know, the smaller firm arena. What was the second part of the question?
Yeah, it's what is the hands-on involvement like with other firms or with firms?
So we interact daily with the people at the firm, our staff with the firm staff, as well as the attorneys. Again, we kind of tailor our approach to your culture and your expectations. Also, we do have managers, several levels of managers to ensure that the support is there. We have a team lead that is more involved on a daily basis of overseeing the work product and results. We also have a supervisory level and a director level, and then of course myself. So we have a lot of people that are involved in oversight and interacting, which includes, at least during implementation, weekly meetings, and then those, you know, tend to, you know, diminish in frequency as, you know, as everyone gets comfortable. And we do have firms that want to meet with us daily as we're implementing. So again, it's all to the comfort level of the firm. But even when, you know, things are up and running smooth, everyone agrees, there would still be at least a monthly touch base with the management team.
Thanks, Suzanne. I just want to remind people on the call that, you know, Suzanne leads the billing and e-billing division. So you're really looking at that part of the intake to cash cycle. Other parts are, you know, the operating model might be a little bit different. Although, you know, our view is to look at the cycle holistically, to Suzanne's point, because that's the only way that we're able to make sure that we're able to minimize the impact of rejections and reductions across the flow. Actually, another question that I'm getting here is you talked about kind of the small clients and how a leveraged resourcing model can help share resources across smaller clients so that they're able to get the benefits of best practices applied to some of the large clients at their firms. But, you know, who are these big clients? Question is, do we have any billion-dollar clients?
Do we have any what clients? I'm sorry.
Any billion-dollar clients? I'm guessing it's any clients doing $1 billion and
oh, $1 billion. Yes, yes. We have currently, I believe we've implemented with 5 that are in the $1 billion club, and we are speaking to others as well.
Thanks, Suzanne. And you know what? You know, speaking about kind of just the gamut of clients, kind of on the larger side and the smaller side, and we have on the call, I'm looking at the list, and we have on the call attendees from both large law firms and smaller law firms. Could you just talk about kind of some of the differences and you know, things that, you know, we talk about some of the best practices that might resonate and be applicable for firms of all sizes, but are there any distinctions that you would make between how kind of the cash cycle is managed in the larger firms as a smaller firm, and things that they should be aware of?
Well, I think the steps are the same. I think the ability to attract and train resources for the smaller firms is a concern, where the larger firms may not have that same issue. So I think where we would benefit the smaller firms is in being able to provide trained resources and manage those people for you, where the larger firms may have specific processes and procedures that they would like us to follow. So I would say that for the smaller firms, we probably provide more, more instruction and advice on best practices, where with the larger firms, we can and have provided that. I think that they tend to have more just, the ability to keep up with the new e-billing volumes.
Mhm. Yeah, that makes sense, and I think it touches a point that you made on one of the when speaking, I believe, about AR, that your the concern for some of the smaller firms might actually be to free up billable time. When you have partners and fee earners essentially chasing delinquent AR, it's not the best use of the time, and having a process that is followed in some larger firms where you have specialists conducting that part of the process might actually be beneficial for them on freeing up time, sort of the opportunity cost side. On the larger firms, a 1%, if you're doing 100 million in revenue, 1% payment realization improvement is $1 million, right? So it is very, very quantifiable, and that's actually ties into another question I'm getting here. Just in general, what is the payment realization that we're able to achieve for our clients versus kind of what we're seeing in the industry? And a second question, while we're at it from a separate person, is do we offer reporting based on results?
So I'll let you take the pricing question, but as far as our realization, we are currently experiencing about 98% collection realization on our e-billing.
Yeah,
And that is, and what we're typically seeing for most firms is at best, low 90s. And we see a lot of, especially for e-billing, into the 80s, mid 80s.
Do you see any difference there between sizes of the firms, or is this generalized across the spectrum?
Yeah, it's just across the spectrum. I can tell you that, the more involved we are, the better our results. So those firms that we have, that we are doing the billing, e-billing and collections, we see a higher result. But we are across the board seeing 98%.
Got it. Thanks, Suzanne. And the other question I got here, I'll try to answer. It says, do you offer reporting based on results? And I guess Suzanne mentioned that we do, when we have client engagements, we engage in periodic touch points depending on the frequency that each client needs. And we have scheduled business reviews where we would review some of the analysis and just performance. Normally, the results that we're discussing today, we're able to see them on the impact. When you look at payment realization, collection realization as the key metrics that we're to really get a view of collection realization improvements, you're looking at 2 years and payment realization 1 year. But you can start seeing some trends, and we do offer. When we do these client meetings and we're reviewing trends, this is something that we're looking into the data and looking into trends. When we're scoping out the client engagements, usually we would segment part of the portfolio where we've identified through the analysis that Suzanne mentioned on the AR side, where we've identified kind of problematic areas or areas where we could significantly impact improvement, and usually we would be reporting against those targets. So hopefully that answers that question. So it is, yeah, we do report based on results, but it is it is a collaborative process that we usually engage with clients on, set targets and collaborate on what we want to achieve. And actually, this ties into another question that I'm getting here. It says, if you had a firm change one behavior that will have the greatest impact on their performance, what would that be? Suzanne, what would you say on the billing side?
Yeah, so again, I just go back to that first step, that intake, making sure the information is is gathered from the client, is distributed to the right people, and making it available so that timekeepers know what the expectations are of the client, the billing attorney, the billing department. I just think that first step is the important building block of the rest of it.
Yeah. Thanks, Suzanne. And one thing we didn't really discuss here, but I just want to make sure that that you're able to speak about it. Is, I mean, we do have from Frontline's operating perspective, we have a part of the services are being delivered through Goa, India, and our team there, and it's a team interacting with our team here in the U.S. And how does that work? And what are some of the common questions that you get from clients about the operating model and some of the things that where they see the most benefit in because of the operating model?
Sure. So yes, we do offer services from Goa, India, which can significantly reduce the cost of these services. As far as the structure there in Goa, there is a director level person that I work with very closely. She and I are developed this program together, so she knows everything I know, and she oversees the team there with the help of leads, and then on the U.S. side we have implementation specialists who make sure that the scope of the work is understood, gets the operations off to until the point where everything is managed well and expectations are met, and then while they will still be involved to some level, it becomes more of an operations. So I know that the main concern we have with people from offshore, India in particular, is the ability to communicate. But we do hire based upon the ability to speak and write well. They are in a province there or a state there, Goa, which is a English first speaking state that is really started as a Portuguese settlement. So they are very well educated, been educated in English, and that is also part of our hiring process. In addition to that, I would say that if there are concerns about communication, we do use templates, at least for the first few contacts with someone, to make sure that those concerns are addressed. That's good for efficiency, as well as making sure that you're comfortable with those communications. But we also wouldn't want to stay on templates forever. It would get a little strange if you've contacted someone 20 times
Right.
and you're still starting with the same thing. But it at least breaks the ice and gets everyone comfortable.
Thank you, Suzanne. And we're getting towards the end of the webinar, and I just want to remind everyone that we will be sharing the slides and the recording of this session. If you have any other questions, please submit them now. But we have also we've shared our contact information here, and if there's any questions that were not answered today, or if you want to dive deeper in some of the materials that Suzanne has shared today, we'd be happy to take your call and have a discussion. So again, this was intended to be a high-level overview of how we view the intake to cash process, the rationale for why we think that we need to be looking at the process holistically, while at the same time looking at the different functional expertise and skill sets required in order to be able to achieve the KPIs, the KPI improvements that we've called out. So hopefully what was shared today helps people set those KPIs, think through how you would create those operational work plans, how you would create build out your teams and staffing and set targets and benchmarks for improvement. But again, we're here to help, so please feel free to reach out. I don't see any more questions. I think with that, thank you so much for joining us today, and we hope to do more of these webinars and share more of our experience with you. But again, please reach out if you have any questions, because we want to know what you want to hear about, and we're happy to have these discussions as often as we can. Thank you.
Thank you, everyone. Have a great